Western Australia has reported a record $5.6 billion surplus thanks to surging iron ore prices. Business reporter Edward Boyd joins me now. Ed, iron ore is currently at about $130 a tonne, but in 2016 the price fell to a low of $40. Did WA report a surplus that year as well?
They did not. So this is how critical iron ore is to WA's economy. I've had a quick look over some of their previous budgets over the last few years when iron ore prices were lower. And yes, in 2015-16, the iron ore price reached a low of $40 a tonne. This is their budget that year. They reported a deficit of $2 billion. The average cost they received for their iron ore during that year was $50.9 a tonne. The start of the Treasurer's speech says this is the most challenging economic and fiscal environment the state has faced in at least 3 decades. So that was that financial year. We go ahead to the next financial year, deficit of $3 billion. Iron ore then was a little bit higher at 68.5 a tonne. But in the Treasurer's speech that year, it says the dramatic fall in commodity prices, coupled with declining business investment and the flow-through effect on the rest of the economy, including the labour market. So that was a tough year for WA too. Go ahead to the next year. This is the first year of Labor's government after 9 years of Liberal government. This is Labor's first budget. They talk a lot about the GST revenue, deficit of $1.3 billion that year as well, iron ore 68 a tonne. It's worth noting these 3 budgets were before the new GST deal. And that would have given them substantial revenue those years as well. But iron ore is obviously critical to WA's economy. They've just reported a $5.6 billion surplus, and they're expecting the price of iron ore to be $121 a tonne next year, whereas the federal government has it falling to 55 a tonne in March. So WA's a lot more bullish about iron ore, and you can see why. It's just been very good for their economy.
Yeah, indeed. Iron ore has been the hero. I mean, WA always goes through boom and bust cycles, but it's been in quite a boom for quite a long time, hasn't it?
Yeah, look, it's had a boom for the last few years. You can see 2017-18 budget, Labor's first budget, they were still in deficit, but then they got really back on track pretty quickly after that. And a lot of it's really been due to just the rise in construction around the world, the need for steel mills, particularly in China, to be buying vast quantities of Australian iron ore. It's also Aussie iron ore companies that have expanded their shipping capabilities and expanded their mining operations, and they're able to just literally send record amounts of it overseas. So it's all helped WA's economy and obviously the federal government as well.
Yeah, I guess political leaders will be having a very close eye on what's happening in China. China is putting a squeeze on how much steel they buy, indeed how much iron ore they buy from Australia, and it's been threatening to go to other markets for years now. But that hasn't quite translated yet, but it doesn't mean it won't soon.
Well, that's right. Look, iron ore is critical for our economy. It's pretty amazing what China's doing. They're actually crippling their own steel industry at the moment. They are telling their steel mills, you must shut down and stop operating, purely because they want to push down the price of iron ore. They believe they're paying way too much for it. So China is actually putting the brakes really hard on its own people here to crunch the iron ore price. And one of the other reasons is pollution. We've got the Winter Olympics coming up in February, and China want less coal-powered fire pollution in the air around the city of Beijing, so it can look good on camera. But our government is watching iron ore very closely, that's for sure.
Yeah, look, that's not the first time China's done that either. It did it during the Beijing Olympics as well. And, you know, for much lesser events, you might say it has put a pause on their coal mining and coal production there in China. But anyway, let's look at the local market. It's just open. Did it bounce back?
It did bounce back. It's actually bounced back a lot more than what analysts were expecting. The ASX 200's up by about 0.7% in early trade. So it dropped 2% yesterday. It's back almost up 1% this morning. Look, I think it's a bit early to see which sectors are doing well, but I can predict the gold sector is probably going to be one of the better performers today after the gold price rose overnight. So it should be a good day for the market.